Hang Seng is up 1/10% as we speak.
Fed's going to have to come up with either a new idea for what's going on in the job market.
From a geography mix, you know that we do about 49% from US, whereas most of the peers are at about 70%.
Really no real reason for the Fed to turn soft today.
The Nifty holding at that 18,150 mark.
The earnings momentum is there, the results are there, and there is a bit of a fundamental tailwind, so to say, as far as the markets are concerned for the domestic economy.
Fashion has grown 43% year on year.
It was a very weak set of P&L from LIC Housing Finance, given the fact that the net interest margin came in at 1.8% when compared.
Things were quiet, right, on the markets. A bit of a wait-and-watch approach.
To ensure that the farmers get the loan at absolutely minimum amount of time.
India has done a lot of heavy lifting over the past few years.
Current quarter, our gross sales were 108,092 million, up by 13.1% year on year on a like-to-like basis.
Markets actually slipped from the top of the trading session.
Well, that was the day so far. You're with us here on a fresh new edition of Closing Bell. I'm Prashant. With me, Rima Tendulkar and Nigel, of course, joining us from the studio, from the newsroom floor. Guys, hi, afternoon. So there is a bit of a slip which has happened, and it occurred mid-afternoon, exactly at about 12 or so, and that cut persists, 80 points lower. So, less than 0.5%, so it's not large by any yardstick. The Nifty is weak, but I have to say that the mid-caps and small-caps are doing a little better. Those indices are down 0.25%, less than that. Nifty market, the NSE market breadth overall is exactly almost 1:1. So that is interesting. Metals, pharma, these are sectors which continue to do well for the second straight session. Almost similar kind of gains like yesterday. PSU banks are continuing to pull back. They were the one large outperformer all of the last fortnight or so, and this week they're pulling back. Real estate and autos are also seeing some profit booking. And of course, the big cue later today remains what the Fed will do and what they will say. I think there's been enough said about that, and we'll discuss more with our guests. But that remains the number one cue when we come back tomorrow morning. Rima, hi.
Hi, and we just have to wait a couple of hours, right? 9 hours to be precise, because the Fed decision will be out at 11:30 p.m. India time. But the question is, what does the Fed have to gain by actually indicating perhaps it's stepping down on future rate cuts? Because you have the US CPI inflation, which will come out on 10th of November. Strategists are saying there are signs of disinflation, but perhaps the Fed may want to wait for this key data point, because this will be an important trigger. But we are seeing some big price action in individual names where the earnings reaction have been on either side. So LIC Housing Finance has cracked 10%, but on the flip side, Karnataka Bank has shot up even on the turnover list. We've had 4 days of big gains on our markets. So today you are seeing a bit of a breather on the benchmark indices. So the Nifty is down close to about 0.5%. But in that, it's pharma which continues to move higher. The Nifty Pharma Index is up 0.5%. And this week itself, it's gained close to about 4%, powered by the strong numbers coming through from Sun Pharma as well as Dr. Reddy's. Nigel?
Well, guys, in the morning, the call was take some money off the table ahead of the big event. Let's see how that event plays out. But it appears, after the kind of run that we've seen, some are taking some money off the table, particularly on the index. But the final 60 minutes beckons. So first up, let's run you through what all we have lined up on the show for you. The key indices stumble to the day's low. The broader markets trade flat. Sectorally, metals and pharma stocks buck the trend, while IT and autos drag. A couple of lenders are buzzing in trade. LIC Housing Finance tanks on the back of a very weak showing in the second quarter, while Cholamandalam gains due to strong numbers. Excerpts from our chat that we had with both the managements lined up later on in the show. Another one from the lenders pack. Karnataka Bank rallies through the day, locked at upper circuit. A detailed fine print on those very strong numbers later on in the show. And ahead of MSCI's semi-annual review, what are the stocks set for inclusion and exclusion? We'll get you those details as well. And as always, our Alpha Manager of the day, Aditya Sood of InCred PMS, will be joining in to tell us his top bets, as well as how's he viewing the road ahead for the markets.
Okay, well, how should you position yourself now in the last hour? Mitesh Thakur is back with us with exactly that. Mitesh, hi. Good afternoon. So it's neither here nor there. A little bit of, profit booking. Just under 0.5%. What would you do, if anything?
Yeah, good afternoon, Prashant. I think, as you rightly put it, neither here nor there. But I think, we talked about this fact that
the gap up which happened on Tuesday, the Monday's high was around 18,022. So I think as long as we are above that, I think the immediate trend will be on the upside. So in that sense, I think, just trade your stop loss about 18,020 on the spot. And let's see, if it doesn't get violated, then I think maybe, after a day or two of choppiness, the market should again resume its uptrend and head towards 18,250 and then possibly 18,500 plus levels. So as of now, I think the structure remains positive, so nothing much to worry about. I have one sell and one buy call right now. Gas authority is breaking out, so there's been a buy earlier as well, but even now can be bought with a stop at about 89 for target of 96. And Canfin Home Finance is something which has turned slightly negative on the short-term charts. A good breakdown taking place over here. So that's a sell with a stop at 514 for targets of 480.
Okay, those were a few technical trading ideas. Let's talk a bit about LIC Housing Finance. That's taken a big knock today. Stock is down close to about 9%, 10%. In fact, very weak set of earnings. I think the revenues, the profits are down close to about 60, 70% on a quarter-on-quarter basis. The margins have contracted by 70 basis points. And the yields on their loans have also fallen despite us being in a rising interest rate scenario. Let's hear out what the management had to tell us about the quarter gone by and the outlook. Listen in.
As far as the NIMs are concerned, we are very confident that in the quarters to come, there will be definitely an improvement beyond what we are now have planned also. And we are very sure that the credit cost will be around 45 to 50 basis points analyzed. That's what we are looking at. Then going forward, both in the developer book and also as well as the individual loan book, we will have very good improvement in our NPAs. Loan book growth is concerned now, we are very optimistic that the growth is around 15%. Then in the coming 2 quarters also, the demand is robust. And we are very sure and confident that we will be showing a growth of minimum 15% for the whole year.
Okay, so they're confident of a loan growth, but this quarter, the NIMs did disappoint the street. They compressed by 75 basis points, though the management is confident it will improve in the coming quarter. Prakash, the markets have given it a big drubbing today. Your thoughts on the stock in the way forward?
So I think, Rima, the market is in no mood to, accept very gracefully these kind of misses for the simple reason that markets kind of getting into this mood of being spoiled for choice. And if you look at whatever market share losses LIC Housing Finance would end up having, given its own issues of slowing down, probably their focus has been on certain other things in terms of repairing the balance sheet or making the balance sheet stronger, and that's exactly why you have this miss. You have other players like PNB and Canfin that will definitely quickly take on that space which LIC Housing Finance vacates. And my bet is on something like a PNB Housing Finance, which has completely revamped itself. And you look at the numbers contrastingly that came by last week. Very clearly, it does indicate that things are moving fine. And once PNB Housing Finance starts getting some sort of a traction in terms of incremental market share growth as compared to some of the other, some of these players like Canfin and LIC Housing Finance, you'll probably see it getting re-rated. So the drubbing probably is justified of sorts, but I would rather focus on what's working rather than not working at this point.
While LIC Housing is down, Chola Finance is up about 5% or so. Numbers were pretty decent. Management commentary is decent as well. Although by their own admission, they're being conservative. They expect a pretty decent demand environment in Q3 and Q4. Listen in to some of that commentary coming in from the president and CFO of the company we spoke with in the morning.
We will look at around 20 to 22% AUM growth as we move forward for the full year. And if things pan out better, it can even be better than that. With regard to the NIMs, I have spoken earlier also. For the full year, we expect the cost of funds to increase by around 50 to 60 basis points going by the trend. And as of YTD level, the cost of funds is still lower than compared to last year. But yes, as a quarter-on-quarter, that is Q1 versus Q2, there has been a drop because of the cost of funds increase. This is expected, and this is what we have guided, as you rightly pointed out. way forward is looking at the coming festival seasons and a reasonably good harvest, for a predominant part of the country, especially in the context that we are spread all over the country almost equally. So while there could always be some regions or geographies where there can be impact, we will see some amount of reasonable growth in the rest of the locations. The higher yield products will have higher OPEX and higher NCL. So to that extent, it will offset a bit. So while we do higher yield product, you may also have a higher OPEX. So the NIMs can move depending on the product mix, but the ROTA is what we focus on to make sure that we deliver a pre-tax ROTA of around 3 to 3.5%.
Prakash, hi, afternoon. Any thoughts on Chola?
Good afternoon, Prashant. So I think it's an ace management in probably one of the best segments of pockets and has such a strong leadership position. And if you see the disbursals that were so strong, I mean that the book is growing so robustly, that's a very positive sign for any company which is into this business. The margin pressure, which is thanks to the cost of funds, will continue. But remember, these businesses have an negative impact of increase in interest rate, which is front-ended. You cannot pass on the high prices immediately when your cost of fund goes up. But when interest rates start softening, which, end of the cycle, you probably continue to gain the benefit of higher interest rates on the lending, whereas your cost of funds will start softening very dramatically. So this is the nature of the beast. So there's nothing very different about the numbers. There's no surprises, unpleasant, so at least. And what seems like happening is that the management is focused on a growth rate which is much better than the last many quarters averages. Now, in a company like this, if they can do that with the kind of clean lending that they've always been known for, I think you'll probably see some very strong numbers coming in the next 3-4 quarters. And that's exactly why the stock is kind of smartening up in spite of numbers which are just about right. Nothing very spectacular. But I think it's a boring business that will pay you off in the long run very well.
All right, Prakash, you track Tata Motors very, very closely. But I just look at the Tata Motors stock, even today, it's virtually unmoved. But the Tata Motors DVR, well, that's doing a whole new dance altogether. And the last 1 month or so, clearly the street is sniffing something. Any view on the DVR?
Nigel, good afternoon. I think it's very simple. The market loves to, always fancy something which is kind of opportunistic. And the DVR was giving you that the arbitrage was too significant, the discount was too significant. I remember you pointed it out very in a very studied way some time back. And that's the whole idea, that you have a stock which is going to have ups and downs given the kind of volatility in numbers, in margins, what's happening in Europe and some of the other geographies like China. So it was bound to be volatile, but the DVR gave you a little bit of that cushion because the arbitrage was significant. The discount was significant. And that's exactly why there's more demand which is now coming in for the DVR. I don't know about that special thing that the market is sniffing, but I think the discount will continue to narrow as the popularity grows, and you'll still be able to ride on the benefit of the underlying, right? So that's looking positive given its EV sales and all those robust numbers that it clocks. If you don't have any disappointment from China anymore, I think Tata Motors will probably continue on a very strong footing. Sometime early Jan, Feb is my guess, because that's when the reopening of China is anticipated. And don't expect fireworks till December, at least in some of these stocks in the auto pack.
Okay, all right. Prakash, one more question I wanted to ask you on a couple of these pharma names. Yesterday we were highlighting about Pyramil Pharma. It was under pressure, but that was because the MSCI rejig was there. And that's why the stock was down. There was massive volumes. Today you can't buy it because it got locked in upper circuit in the first hour itself. And tomorrow it comes out of T to T. Have you had a look at this one? And either this one or you could comment on Gland Pharma as well. That was at a fresh 52-week low. And it's bounced up a little bit, but there are various concerns out there as well.
So let me take Gland first because it's simpler. It's a no. I wouldn't want to allocate any money to Gland Pharma given its yo-yo and so many promises that haven't actually been delivered, right, on the execution side. So it's always something which, and it's always been very traded at very high premiums, Nigel. So your margin of error is significant out, very low out there. So if you can get washed out very easily if something goes wrong. On Piramal, I think post-listing, this is a very interesting case study where you know that there is a very strong pipeline, there's a very strong API element, there's pedigree which is tracking there. They've been raring to go at this business, thanks to the non-compete being so long. All of that was very positive, but technically the listing happened at a time where things were probably not looking as positive for pharma, and hence you had that subdued kind of a pricing. But that is kind of getting out of the way. This MSCI exclusion also is something which was more like a overhang, which is out. So once all that is out, fundamentals take over in a significant way. And from that perspective, I think it still holds value. From the long-term portfolio, you'll start seeing Piramal Pharma feature in a lot of institutional portfolios in a significant way. Right now, the percentages might not be very high. It's only organically whatever you have. But people will definitely want to switch into this as it kind of matures as a stock. But for retail investors, the best thing to do would be to add onto this on dips, not on a day like this when there's too much of exuberance around the stock. And this will pivot after some time. This will probably wane out after some time. That's when you need to probably look at the stock.
Okay, by the way, just watch some of these stocks. Redington is reacting to its numbers. Stock is up 9.5%. Very strong Q2 numbers. Revenue growth of 25%, profits have gone up 26%, and this is much higher than street expectations. IIFL's estimate was that revenue growth would be about 10 to 11% because Redington does get a significant percentage of its revenues from the export market, and they thought the weakness in the markets would weigh on the growth metrics, but it's a 25% revenue growth from Redington versus IIFL's estimate of about 11%. That stock is on fire. You've got IFCI, which is now locked in an upper circuit of close to about 20%. There was earlier a note from Bloomberg where the government, according to that note on Bloomberg, the government is planning to infuse 2,000 crores in IFCI and merge the company with the unit. And since that announcement has come through, the stock has been seeing a lot of buying. Railtel, LIC, IRCTC, Lemon Tree Hotels, Edelweiss Financial Services. So many of these stocks are seeing some big moves in the last 10 minutes or so. We'll slip into a very short break. On the other side, we'll also invite our Alpha manager for the day, Aditya Sood of Incred PMS. Stay tuned. Welcome back. Still down close to about 0.5% on the benchmark indices. So let's pretty much where it was in the last 15 minutes. So let's turn our attention to Karnataka Bank. That's rallying, locked in an upper circuit now. Abhishek is here with the detailed earnings fine print.
Well, Rima, to begin with, it's been a strong P&L momentum for Karnataka Bank this time around, and their overall stress in the balance sheet has also reduced. So to begin with, the interest income is up 8.7% quarter on quarter. This is against the loan growth of 2.6% sequentially. So the NII growth is about 26% YOY and close to 17% on a sequential basis. The net interest margin is at a 5-year high or 20-quarter high at about 3.56%. That drove the PAT. PAT is up 228% on a YOY basis and about 260% on a sequential basis. The ROA, that surprised positively, it's come in at 1.7% when compared to about 0.6% in the same quarter last year and about 0.5% in the previous quarter. Talking about the stress, the gross NPA ratio has declined massively, about 65-70 basis points on a sequential basis, coming in at 3.36% when compared to 4.03% in the previous quarter. And the restructured book, that's also declined by anywhere around 110 to 120 basis points, now forms about 6.2% of the loans when compared to 7.4% of the loans in the previous quarter. Back to you.
Abhishek, thank you very much for that. Prakash, it's a comprehensive beat from Karnataka Bank. Would you give the stock a look in?
So, Rima, this is a redux of what some of these smaller banks have done in terms of the cleanup. We saw KVB, Karur Vysya Bank, follow more or less a similar trajectory. Of course, I'm not expecting Karnataka Bank to do the same way because KVB is from 40 to 100 plus in no time. But Karnataka Bank is under-owned, and that's why you'll probably see these kind of reactions, which are very favorable. And we can't have enough of these banks given all that's happening. But Karnataka Bank would also need to continue to grow beyond just the cleanup. So that's the only thing that will have to be waited and watched. But it's definitely a beat for sure. There's no taking away from that fact. I would still reserve my bet on some of the other proven names. Karnataka Bank has done this after many quarters. So let's see if this kind of continues and sets in as a trend. But definitely looks very positive from a cleanup and a balance sheet strength perspective.
Okay, all right. Prakash, well, we'll have to thank you on that note. Thanks so much for discussing all of those stocks for us. By the way, before we move on to some MSCI changes, just want to highlight a few stocks. IRCTC has spiked up to the high point of the day. And a couple of these rail-related stocks are doing well. Rail Tele as well should come a few. That as well has spiked up a little bit. So a few of them are moving. They're moving quite well. Pfizer is the other stocks. Just pull up the intraday chart. When we started off the show, it was more or less flattish. Now it's up close to around 1.5%. But as promised, let's track the MSCI index review. Well, that's expected to be announced on November 11th. Vivek's with us to run us through the key expectations. Vivek.
Well, that's right. So the MSCI semi-annual index review and the changes, that is the likely inclusions and exclusions, will be done on the night of November 10th. So November 11th morning, we will have the names of the inclusions as well as the exclusions. With the adjustments, that is the actual flows, will take place on the close of November 30th. So now Morgan Stanley has come out with its estimates as to which are the stocks that are likely to enter the index. They are saying that they are expecting almost 8 names to be included into the MSCI standard index this time around. A cumulative of almost slightly over $1 billion of flows is what they're actually expecting on the back of these expected inflows. So which are the names? They're expecting Hindustan Aeronautics, almost $129 million flow is what they're anticipating. Bajaj Holding, ABB India, Bank of Baroda and Varun Beverages are the other stocks, all of which are likely to see flows anywhere between 140 to $180 million of inflows. Now, there are 3 more stocks that they have highlighted. Now, these stocks are actually likely to migrate from the MSCI small cap index to the MSCI standard index. So, Tube Investments, almost $222 million flows is what they're anticipating. TVS Motors and Canara Bank are the other names that they have on their radar. Now, there are 2 other stocks to keep as well. Morgan Stanley also estimates that Zomato could see a likely weight increase in this particular index review. Almost $167 million worth of flows could come in on the back of this development. And apart from these names, IIFL Alternative Research also indicates that Indian Hotels also has a chance of making the cut as far as this particular inclusion is concerned. On the other hand, IGL and Biocon are 2 stocks that could likely be exited or that could be likely exclusions from the standard index this time around.
Very interesting, Vivek. Thanks very much for that. The changes will be announced on the 11th of November morning, and the actual adjustments will take place 30th of November. If all of this goes through, as Morgan says, that's $1 billion in inflows. Changes happen in 3 stages. First is expectation of what may happen. Then there is the change. Then there is the actual effective change, and it's actually become. But some of these changes are so large in anticipation of these events that it's actually become quite important to track. Well, let's talk about markets with our alpha manager of the day, Aditya Sood, is portfolio manager at Intred PMS. Aditya, good to have you back. Thanks very much. Welcome to the show. I see that in the recent changes you've made to your portfolio, you've got Intellect Design. Can you talk to us about that? Because numbers were disappointing. The stock did see a pretty large reaction on the back of these earnings. What was the rationale and why do you like it?
Sure. So thanks for having me, Prashant. Actually, if you look at Intellect Design arena, it has got a very unique positioning, because it is earlier competing with companies like Fenestra. Now it is competing with companies like Temenos, which is a global champion on the product side in the BFSI vertical. Now, first of all, the company has a very large TAM. The TAM is closer to $30-odd billion. The stock has, ever since the demerger happened, the stock went on to becoming a 10x stock. And now what we see is that, the correction has been very, very sharp in the stock. The stock has fallen by close to 60-odd%. Obviously, the market is a bit disappointed by two factors here. One is the growth factor, because initially, the company was guiding for a 25% odd growth, which has been downgraded to 20 odd percent. And secondly, the margins. Now, we do believe that as they migrate from more towards cloud and being SaaS revenues continue to inch up for the company. They are close to 23 odd percent today. So what we believe is that, over a 3-year basis, SaaS can be easily close to 40%. And when there is a migration to the cloud, obviously it is a pay-per-use sort of a model. So we are buying the stock in a weakness. We believe that the valuations are very, very undemanding at 15 times 1 year forward. So this is purely positioned as a unique play on the cloud side. We were looking at a lot of companies. Unfortunately, SaaS plays in India are very, very expensive to own, or the analytics plays are very, very expensive to own. And that is why we are buying into Intellect on a weakness.
Okay, Aditya, afternoon. What about Bharti Airtel? The company seems to be firing on all cylinders when it comes to the numbers. India Mobile, even the enterprise business, the homes business is doing pretty well as well. But that's a stock where you are cutting your positions. Can you tell us why?
Yeah, sure. So essentially, Bharti, we have been, 2.5 years. It has been a 2.5-year-old position for us on the AIF side. What we find today is that, we would ideally like to avoid companies which have got dollar debt. So that is one of the reasons. Secondly, valuation arbitrage was there. We bought Bharti when it was trading when the India business was possibly trading at 6 times the EV by EBITDA. Today, what we see is that, that valuation catch-up is behind us. Even though Bharti has done a phenomenal job in terms of the ARPU inching up recently, but we do believe that 5G is not going to be accretive as far as ARPU is concerned, because we are in the launch phase and we already know what is the pricing been for both Jio and Bharti. So that is the reason of booking some profit in Bharti. It is as simple as that.
Okay, hi Aditya. So you're booking some profit in Bharti, and you have a contra call on IT, and part of that includes Intellect Design, as you just mentioned. So our viewers should just take note of that. But, Aditya, everyone's very, very bullish on the auto theme, in particular the CV theme. And you have found another way to play it, Forgings. That one, in fact, has done pretty well in the last, say, 18 months or so. But the big re-rating will come when the multiple gets re-rated. They have a lot of capacity as well. Tell us, what's the rationale out there?
So, Nigel, as you clearly pointed out, autos are cyclical plays. Within that, obviously this company is predominantly focused on commercial vehicles, more so on the heavy commercial vehicle side. Now, one of the things that we see here is that, India has got a clear-cut advantage in terms of forging, because we have got, captive steel mills in India. And second thing is that, power and freight is a very, very large component of cost for a company which is doing forging. Now, what we find interesting about Forging is that, this is obviously they are gaining market share with both Tata Motors and Ashok Leyland in the domestic market. And obviously there is a global play here as well. So we believe that over a period of time, this Euro Plus One is going to be very, very beneficial for Indian forging companies. And clearly that gets reflected in Bharat Forge. There are 3 companies which are listed, RK, Forging and Bharat Forge. So we prefer Forging because essentially there is a play on more machined components. Machining is a 500 basis point higher gross margin business. So we expect return on capital as well as margins to improve going forward. The valuations are very undemanding at this point in time. Again, the stock has gone through a bit of a correction. If you look at, last 3 months or so. So we are buying into it from a reasonable valuation perspective.
2 more changes. One is you bought Equitas and you've sold IDFC. On IDFC, I mean, has the full kind of structure collapse, etc., everything played out to your mind? So let's start there.
Sure. So essentially, again, it is an old stock for us. Our buying price was, we were playing the holdco discount. So our belief is that, the similar sort of holdco discount is there in Equitas Holdings, which is there. The Equitas merger is around the corner. We believe that there is a 20 to 25% holdco discount, which is clearly unwarranted. Secondly, we have been using this filter of on the small banks of 1.5% ROA, and Equitas is now reporting 1.6% ROA. They just reported numbers yesterday. So what we find here is that it is a very well managed franchise, both on the asset and the liability side. Essentially, they've done a phenomenal job in terms of liability, in terms of having the CASA that they have. So we believe that there is a similar sort of a valuation arbitrage opportunity, and hence we didn't want to increase our weight on overall weight on financials, and that is the reason we made a switch from IDFC to Equitas.
Can you talk a bit about this contra bet that you're taking on IT? Is this just a tactical call, and which stocks in the IT pack are looking most attractive to you?
Sure. So one is that we do believe that at this juncture, we are heading into a macro environment wherein demand is not going to fall off the cliff. Second thing is that, if you look at Indian IT story, in every cycle, there is a temporary blip, and over a period of time, we realize that Indian companies typically tend to gain market share. So that is point number one. Within IT, we are very, very constructive on engineering, research, and design as a play. So if you look at our large cap companies, wherein we have invested, which is a combination of a company like HCL Tech, they have a majority of their revenues within the large cap IT companies coming from engineering, research, and design. So that is one place we are very, very constructive on. Secondly, Intellect Design Arena, which is a unique company on the product side. We do believe that demand is not going to fall off the cliff. Thirdly, the valuations are very, very attractive in our view. You can find IT companies anywhere between 12 to 20 times 1 year forward earnings. Multiples have clearly collapsed. We don't see a scenario wherein multiple compression can happen in these companies. Obviously, growth will slow down. But our view is that, structurally from a 3 to 5 year perspective, IT companies will do reasonably well.
Okay, all right. Aditya, just hold on for a minute. Kajaria Ceramics, they have come out with that set of numbers, and actually the numbers are looking a little bit disappointing. We're just having a first look out there. On the top line, there's a growth of close to around 10%. There was input cost pressure, which we are aware of, but the margins have got compressed to around 12% odd. So sharp compression is what you've seen both on a sequential basis as well as on a year-on-year basis. But Aditya, before we let you go, the big theme and the big consensus play has been banks. Now, you believe it's time to look at some of those smaller banks? If yes, which ones do you believe?
Sure. So we believe that, there are smaller banks like CSB or Equitas for that matter, wherein we are using a 1.5% ROA filter. The valuation catch-up for most of the bigger banks has already happened. We have got Axis Bank in the portfolio. We believe that, it is still more reasonably priced amongst the large cap banks. But our view is that, there is a big catch-up which is going to happen after a long time. I am seeing small cap banks rallying, be it Karnataka, be it J&K. So our clear-cut belief at this point in time is that, there is a arbitrage here because you have got well-managed banks which have done a phenomenal job, be it COVID or no COVID. If you look at, Catholic Syrian Bank, for example, it is an excellent franchise. They are closer to 1.8% ROA. More importantly, we are getting into a zone wherein obviously growth is going to accelerate. Majority of the asset quality concerns are behind us. So we do believe that it is a very constructive environment for small cap banks versus large cap banks at this juncture.
It's been good speaking to you, Aditya. Thanks so much for stopping by. We like the contra call that you put out on IT. You believe that some of these smaller banks should be given a look at. An interesting way of playing the CV space via MM4Jings. Thanks so much for joining in and sharing, the way you'll have to rejig your portfolio as well as your view on the markets. Well, for the time being, though, we'll slip into a short break. But as always, on the other side, Nimesh will be waiting for us. He'll be telling us about what's going on in the dealing rooms. We'll also get our technical experts who will be back with us to give us buy and sell trades for tomorrow. Welcome back. The Nifty is down close to 60 points odd, but the mid-cap index is as flat as can be. Ahead of the big event, it's a good time to get into D Street chatter. Nimesh joins us. Nimesh, what are you picking up with regard to the flows picture ahead of that big event? And yesterday, as you told us, the FIs, they were going to show us the money and big buy number coming in. Bang on.
Nigel, looks like even today they'll show the big numbers. So if not big numbers, but there'll be a positive bias is what I understand from the dealing room. So that's that apart. A bit skittish going into the big event. We have a big macro event to watch out for tomorrow. India markets will get to react only tomorrow morning. So that's something to watch out for. I guess, as I said, flows are positive and again biased towards the financial. So that's where the money is chasing. But I guess even within financial, it's a shift from the outperformers to the underperformers. So money is shifting towards HDFC Twins, the small and mid-cap banks which have deliberately underperformed from the likes of ICICI Bank and Axis Bank in the last many days. So that's the clear shift towards within the financials. I guess the important thing to watch out is the reactions to the earnings misses. That shows that the market is well priced. Any miss, and you'll see sharp reaction, and that's showing up in many of those individual names, even in today's state. So that's something to watch out for, even going forward. So, I guess that's where the market seems to be a bit nervous, that there is no room for disappointment in the large cap names, even in the mid cap and small cap names. So that's something to watch out. Apart from financials, there is selective buying again, so to speak, the follow-up buying in many of the large cap names. So today, for example, pharma stands out, some bit of metal name stands out. So that's where some bit of buying seems to be from the larger institutions. I guess the other big important point to watch is the outperformance in the mid cap and small cap space. That has relatively outperformed today. So that shows the breadth is positive, and there is participation as well from the retail and HI investors. So that's playing out in the mid cap space. But the screen may look a bit weak, but there is buying selectively into the financial names, and some large banks, large mid cap, large non-nifty names are again bought into. So that's the overall picture from the flow point of view.
All right, and Nimesh, that fits in perfectly, right? The FIs, they're coming in big time, and the HDFC Twins are holding steady as well. And they are the ones that got absolutely hammered when they were selling big time. But what about other stocks? What are you picking up?
So in terms of individual names, the first stock is Crompton Consumers. That stock has been consolidating after the Q2 earnings, but now I believe there's going to be a large block deal very soon. A potential clean out trade in Crompton Consumers very soon. So that's something to watch out in days to come. So that's the first one. The second stock is Piramal Pharma. That stock today is locked at 5% upper circuit. Yesterday there was a huge volumes. The MSCI flows change hands, and I believe some of the smart HNI investors bought into yesterday's weakness, and they've been biased today as well. So there is now HNI interest back in Piramal Pharma. So that's the second one. The third stock is Bharti Airtel. That surprisingly is down 3% into this trade, purely on back of selling pressure from the larger FIs. So for the second day running, I believe some long-only funds are selling out of Bharti Airtel, largely profit booking, and hence that stock is under pressure today. And the last stock is Tourism Finance. This is an interesting one. There was a large block deal, almost 6.3% equity exchange hands, and there I believe the promoter entity, basically there are a couple of promoters who are seeking to reclassify and remove themselves as promoters, and that entities have sold in Tourism Finance today. So watch out for disclosures in Tourism Finance, but I believe the promoter entities were seller in today's block.
All right, Nimesh, thanks so much for that. And the good news, Nimesh, is as we had that chat, India's moved closer to around the 185, 190 runs mark on. So hopefully we end up on top even today. That's with regard to the match that we're playing against Bangladesh. But back to you guys, final 20 minutes to wind down in terms of market action as well.
Absolutely. And just another word on Bharti. Today we had downgrades coming in from both Jefferies and Deutsche Bank on Bharti Airtel post the fantastic run-up. And the couple of reasons they cited. One of them is that in Q3, a price hike looks difficult because of state elections. So the earliest we may see an price hike, which translates into an ARPU increase, is perhaps in Q4. Secondly, they also said that expect costs to go up, network costs, because 5G rollout is now taking place. So SG&A network costs is also likely to go up. And another point that Aditya Sood of Incred, who we were earlier speaking to, pointed out, the company has significant dollar debt, so it does get impacted by the currency move. So big bout of profit taking visible in Bharti Airtel. But Mitesh Thakkar is here with us to tell us what you can buy or sell today for a reverse trade tomorrow. Mitesh, what do you have?
I have a buy on IRCTC. I think that's something, which has broken out nicely and is now at a fresh swing high. So BTST here with a stop at about 748 for targets of 770. And the other stock which I like is the cash stock. Aster DM has given a breakout after about a month and a half of consolidation. So that's a buy with the stop just below levels of 256 for targets of 285.
All right. Thanks very much for that, Mitesh. Well, Morgan Stanley's Rhythm Desai is saying that India is set to become the world's third largest economy by 2031. A recent report by the investment bank also suggests India will become the third biggest stock market before the next decade. My colleague Shireen Ban caught up with Rhythm to discuss key growth risks and a lot more. Here is an excerpt of that interesting conversation.
I think India has done a lot of heavy lifting over the past few years, especially over the last 4 or 5 years. And we did get interrupted by COVID, but we're now coming out of that, and all the labor that we put in terms of policy and other things are now bearing, I think, fruit. There are also a few things happening globally that are helping us. So it seems like a sweet spot for India. In fact, as we highlight in the report, stunningly, India could account for 20% of the growth that the world will generate over the next 10 years. So it's a very, very big shift. India has grown quite well over the past few years, but its share in the global economy is changing in a very dramatic fashion. Now, I'm sensing that companies in India are getting more optimistic. They are starting to run into some capacity constraints, and therefore there should be a pretty good capex cycle in the next 2-3 years, and that will be great for earnings. So that's something that we'll watch out for as well. But I think India is set to now become a meaningful part of the global supply chain. And a lot of companies will reveal this to you, that they're receiving orders. Hitherto, they didn't have access to those orders because Chinese companies used to take those orders, and they are now all set to increase capacity to service these export orders. On top of this, multinational companies are looking at India as a very attractive destination. This year, India has outperformed emerging markets by 34 percentage points. It's not happened ever before, this type of outperformance. It's really a very, very broken denominator. Emerging markets around the world are really broken. And India is therefore looking so good on a relative basis. But on an absolute basis, the market has not really gone anywhere. We've been digesting, the earnings. We've been digesting what was a relatively high P ratio, and things are, settling down. So it's been a typical consolidation, I would say very benign consolidation. It could have been a far more volatile consolidation, but it's been a benign one. So I think we're prepping it up. I think 2023 looks like it will be a much better year for absolute returns. So yeah, let's look forward to that, and hopefully we can make a new high soon. It seems like several boards across the world are all prepped up to invest in India. And office to the world is a theme that has actually emerged post-COVID. So it's a silver lining to what was a pretty big human disaster, that CEOs suddenly learned that working from home is okay. And if you're working from home, you might as well work from Mumbai. It's a whole lot cheaper than working from Florida. And that is why jobs are being shipped into India. So offshoring is one big theme.
Okay, the market's coming back, by the way, not by much, but we're down only 58 points. Last 14 minutes of trade coming up. Neeraj Devan is director at Quantum Securities. He's with us now. Neeraj, hi, good to have you here as always. What are you making of the sort of market moves, and are we on the cusp of a bigger move? The question is, what is going to be the direction? Because, a Fed meeting in the past, very recently, also has turned out to be that decisive pivot. Not the Fed pivot, but a pivot for the market. What is your sense?
Yeah, good afternoon. Yeah, I think you're absolutely correct. Earlier also, we've been hoping that there'll be some change in the tone of Fed, going ahead. But that has not happened in the previous meeting. Even Jackson Hole Summit, they reiterated their stress on fighting inflation. But this time also, their expectations are built in that there's going to be some change, or some sentence may come in the meet where they will hint at some slowing down of interest rate hikes going ahead. So, but that is anyone's guess. We don't know. But then markets have positioned themselves. Even US EZ markets have gone up. Here also we are now close to the highs. So there has been a rally in the market. So the events which unfold today, tomorrow, are domestic. domestic, RBI meet also, and plus going ahead, US inflation data next week and job data will definitely have some bearing on the markets. And but though I'm not looking at, even if there's some disappointment as far as these events are concerned, I'm not looking at a big correction in the market. So maybe there may be some pause, some small correction, because if you see our corporate results, we have been coming out with very good results, especially financials, which form a very large part of our sensex and nifty. So there have been good results, and they will support if there's any correction in the market. I think going ahead, of course, short term, the events will dictate what happens. But I think over the medium term, I'm still positive on the market. Any downside because of these events should be used as buying opportunity.
Okay, all right. Hi, Neeraj. The biggest loser today is Bharti Airtel on the Nifty. It's down closer on 3%. Jefferies, they say that strong growth outlook has been priced in, and that's why they downgrade the stock to hold. What's your view on the stock?
I've been following Bharti for quite some time as far as the price movements are concerned, not purely on the fundamental, but purely on price movement. I've seen that, whenever before the results we see good rallies in Bharti, it gets priced in pretty fast even before the results are out. I think that's what happened this time also. Bharti had seen a very good move, in the last couple of months. I think that is the kind of profit taking we are seeing now, even in spite of good results. And going ahead, there will be some pressure on the margin because, like even the Jefferies report had pointed out, the pressure on margins may come because of the 5G rollout. But I also agree there. So going ahead for a quarter or two, there may be some pressure, and that the RPU improvement also may not come very soon now in the next couple of months or 2-3 months. So I think this profit taking that has happened now, you may not see too much of an upside from these levels for some more time in Bharat.
Neeraj, any thoughts on Eicher Motors? The sales were robust for the month of October, record sales. Royal Enfield sales were up 86%. While the other two-wheelers faced some issue in the export market, for Eicher Motors, the exports were up 62%. But the stock is under pressure today. Any particular reason, and your thoughts on the stock?
I think there was some concern regarding the increase in sales is happening because of the new launch, which may have a little lower margin, but it's a low realization, motorcycle. So there may be some concern there, but I think overall the results are very good. And even though there may be some pressure, but on absolute term, I think they should continue doing well on profitability. So I think if there's any correction in Eicher Motor, if it continues, I think that should be an opportunity, because though I'm not too positive on the two-wheeler space as such, but so maybe I'll not look at Hero Motor or a Bajaj right now. But Eicher Motor among the two-wheeler space still looks interesting. If there's a correction, I think that's an opportunity.
It has also underperformed, say, TVS Motors by nearly 40% so far this year. By the way, Indian shipbuilding stocks are higher. Mazgaon Docks has rallied 14.5%. Cochin Shipyard has a 7% gain. And Garden Reach is likely to pocket close to about a 9.5% up move. And all these are coming in on very large volumes. Neeraj, do stay on. We need to slip into a very short break. We'll come. Yeah.
Sorry. I want to interrupt your train of thought. But any guesses what's coming up next is India's sleep economy? I'm just wondering what that could be. You want to take a shot? I don't know. I'm just asking. I'm just wondering.
Maybe something to do with apps which track your sleep.
Track your sleep or something.
Yeah.
That's what I thought. I mean, but that should be
interesting.
That should be interesting. We'll take a quick break, the break that Remo was talking about, and we'll come back. There's about 9 minutes to go for market closing, and we'll be back. There's news that Cabinet has approved the mechanism for procurement of ethanol by public sector OMCs. So we'll get you more details on that as well. See you on the other side.
Going to go home a bit subdued for the markets. We've taken a breather. We've had 4 days of good gains behind us. And today, ahead of the big event, the Fed outcome, which will be known at 11:30 p.m., the markets are going home with a cut of close to about 0.4%. But let's turn our attention to tomorrow. HDFC Limited is due to report its Q2 earnings tomorrow. Abhishek joins in with the expectations. Abhishek.
To begin with, they've already given a provisional figure of their business momentum in Q2. So the loans assigned were up 28% YOY, but it declined by 4% sequentially. Dividend income was strong, nearly doubling on a sequential basis to about 1,360 crores. The individual loans sold, that is to SDFC Bank, was up 26.9% YOY and about 6% sequentially. And the sale of investment was nil on a YOY basis as well. So the key things to watch is that the disbursals in individual segment will be strong. AUM growth is expected to be around 16% YOY and 4% sequentially, which is as per Kotak Securities estimate. The net interest margin can increase on a sequential basis. Dividend income, as I told earlier, will drive the PAT, and reduction in restructured loans will augur well given the fact that stress in the balance sheet will reduce. So our polls suggest NII growth of 11.5% YOY and a little more than 3% sequentially. We are working with a profit growth of 6% YOY and about 9.3% on a sequential basis. Back to you.
All right, thanks a lot for that, Abhishek. Well, the other big mover to its numbers is SRF, and Sonal tracks that very closely. For today, she's going to tell us the expectations, and tomorrow she'll give us a review, post the numbers. Sonal, expectations?
Well, expecting very strong set from SRF this time around, Nigel. A revenue growth of 35%, EBITDA growth of 42%, leading to a margin expansion of around 100 basis points. And this will lead to a profit growth of 49% for this particular company in the quarter gone by. Now, what will lead to this growth this time? It will be driven by all the three segments, that is packaging, specialty chemicals and refrigerant gases for the company as well. Strong momentum in specialty chemicals, that is because there'll be buoyancy in prices, and volume growth will also be seen in packaging films as well for the company. Chemical segment is expected to grow anywhere between 55 to 65%, and this time around it will be driven by export markets for the company. Packaging business, the growth here is expected to be very strong as well, and it will be driven by new commission capacity, so volume growth here is expected to be higher. Chemical segment margins, however, are expected to moderate on a quarter-on-quarter basis. This is due to seasonality, and technical textile margins are expected to remain stable on a quarter-on-quarter basis. Packaging segment, however, will see an impact on a quarter-on-quarter basis because BOPET prices have gone down. There are some inventory losses, but despite that, on a YOY basis, we'll see a big increase for this company, and ahead of results, there is some profit taking that we are seeing in the stock today.
Sonal, thank you very much for that. So that's a well-watched, well-tracked company, SRF. Neeraj, thank you very much for joining us today. It's always a pleasure. Appreciate it. Let's just quickly start wrapping up things. It's not a bad close, although it's lowest by about 70 points or so. Mid caps and small caps did much better as compared to large caps, although a quarter percent, less than a quarter percent in that range. Metals and pharmas, two sectors did were higher today. Consumers, PSU banks, real estate, those are pockets which saw pullback. And if you want to look at the large cap stocks, names like Bharti corrected. Apollo Hospitals was lower. There was Maruti, which pulled back a little bit as well. And on the way up, Hindalco was looking strong. There was Sun Pharma and there was ITC, which participated as well. By the way, market breadth still almost sort of stuck to that near 1:1 advances to declines ratio. So that's broader markets for you. Finely balanced, evenly balanced. Rima.
Quiet for the mid-cap index, down close to about 0.1% on the Nifty mid-cap index. On the losing side, LIC Housing Finance down 9%, banks under pressure. So PNB, Union Bank, RBL Bank, Bank of India, J&K Bank, across the board, you've seen cuts ranging between 1 to 2% for the PSU banking or the mid-cap banking space. Karnataka Bank, on the flip side, very strong set of earnings. The net interest margins coming in at a 20-quarter high. Karnataka Bank locked in an upper circuit of close to about 20-odd%. Redington post numbers higher. Piramal Pharma out of MSCI yesterday will be exiting T2T tomorrow. Piramal Pharma sees buying up 5%. Tata Motors DVR continues to outperform in the last 1 month. The stock has gained more than about 20-odd%. And a couple of these shipbuilding stocks, Mazgaon Dock, Garden Reach were also higher in trade. And finally, Redington reacted positively to their Q2 numbers, Nigel.
All right, well, a couple of other names that deserve special mention. SP Apparels, it continues running along. Well, it was up closer on 10% odd. Goldium, we normally don't talk about that stock, but Monarch, the brokerage house, they had initiated coverage on the stock. It was up closer on 10% in trade. And in the final 5 minutes, on Westlife, there was a very large trade that took place. I think around 20-25 lakh shares changed hands. So interesting to see whether or not we get a disclosure with regard to a name out there. But around 325 odd, Westlife, there was a large trade, so we'll watch out for that in the post-market reports as well that did come out. Well, we'll wrap up on this edition of Closing Bell, and it's a wrap on market action, but you don't go anywhere, because up next, Mad About Markets is coming up, and they're going to be discussing a very interesting theme. Stay with us.